Okay, so now we're going to take a look at the financial performance from year 11 to year 18. So, year 11 was a pretty rough year for Atlas. We ranked third overall. I think this was because we were trying to still figure out the simulation. So, it was just kind of like a year of experimentation. So our earnings per share was at $1.69 and the expected was $2.67. The expected return on equity was 15% and ours was only 10.8. Our stock price at the end of the year was only $17.16 compared to the $32, which was the investor expected, and our image rating was at 66 compared to the investor expected amount of 70. Year 12 went better. Overall, we still were in third rank, but our earnings per share increased to $3.86 and the expected was $2.85. The expected return on equity was 15% and ours went all the way up to 21.9%. The stock price at the end of the year for our company was $67.83 compared to the investor expected amount of $34.25. And our image rating climbed all the way up to 74 compared to the investor expected of 70. Year 13 went even better for us, and it actually bumped us into the overall first place rank. Our earnings per share came in at $3.99 compared to $3.05 expected. The expected return on equity was 15% and ours came in at 19.9. The end of the year stock price for our company was $80.71 compared to the expected, which was $36.75. And our image rating increased 10 to 84 compared to the 70, which was the expected. So then moving on to year 14, it was another good year for us, and we also maintained our first place rank overall. Our earnings per share was at $4.32, with the expected at $3.26. The expected return on equity was 15%, and ours came in at 19.4. The end of the year stock price was $86.95, with the investor expected of $39.25. And our image rating again climbed to 91 compared to the 70, which was the investor expected. Year 15 was another solid year for us, but we actually dropped into second rank overall. So our earnings per share was at $5.38 and the expected was $3.49. The expected return on equity was 15% and ours for this year was 21%. Our stock price came in at $89.09 compared to the $42, which was expected. And our image rating decreased a little to 88 compared to the previous year, but the expected amount was 70, so we were still above that. Year 16, we saw a decrease in return on equity and stock price from the previous year, but we still maintained our second place rank. So our earnings per share was at $5.41 and the expected was $3.66. Our expected return on equity was 15% and we came in at 18.2%. Our stock price at the end of the year was $81.45 compared to the $44.25 that was expected. But our image rating still increased. It went up to 96 compared to the investor expected of 70. So year 17 was probably our second worst year overall. We saw a decrease in our return on equity, stock price, and earnings per share from the previous year, and we also got bumped down to third rank overall. So our earnings per share was $5.19 compared to the $3.84, which was expected. The expected return on equity was 15% and ours was only 15.1. Our stock price ended at $63.96, so almost $20 less than the year before. but it was still more compared to the investor expected, which was $46.25. But our image rating did increase all the way to 100, which the other companies were not able to accomplish, compared to the 70, which is the investor expected. So the final year of the simulation, year 18, we finished with a very strong performance. In comparison to the previous year, we saw increase in earnings per share, return on equity, and stock price, and we also finished the game in second place overall. So our earnings per share were $8.63, and the expected was $4.03. The expected return on equity was 15%, and we saw a return on equity of 21.6%. Our stock price went all the way up to $172.86 compared to $48.75, which was the investor expected. And our image rating we maintained at 100 compared to the 70, which was the investor expected.